Okan, great to have you back. It's been a while. How are you?
Oh, I'm very good, Dale. Thank you. I have a background noise. If it doesn't bother you, I'll be happy. Does it bother you any
No,
the
it's not too
background
bad.
noise?
It's not too bad.
Oh,
Where are you on your construction job?
no, no.
Uh,
You caught me. You guys caught me outside, so I had to
okay.
stop somewhere, and I am doing my
Uh,
presentation from.
okay. So, do you want a screen share?
Sure. Yeah. One sec.
Okay. So tell me if my memory is right. Last time we were on, you wanted to buy the euro about 106. And then, oh, you also said that the market, equities would consolidate into the end of the year, and that was a parabolic consolidation. Um, and then you had a little shift, change of heart on the euro that it was going to rally first and then come down to the levels. Do you like it here from 106?
Yeah. I like it from here because I have some reasons which I'm going to share with you in a moment. I
Okay.
think,
Oh gosh, you have a
yeah,
whole presentation. All
yeah,
right. Well, I'm
I,
going to shut up then and let you go ahead and talk about it. Uh, do you think there's any shot that we could take out 106 one more time and then hold the
maybe,
104? Yeah. Okay.
yeah,
Uh,
maybe. But what I think is, uh, investors I hear out there are saying that the euro dollar might go below par, which I think is difficult. And I'm going to present you the reasons why this.
the euro
Uh,
likes gold beneath what?
uh, some traders, some investors mentioned that they claim that the euro dollar may go below one, the par.
Oh, okay. Yeah. All right. Yeah. There's always those, sub parity bears because Europe, the monetary union can't work. They're in recession.
Yeah,
Just like there are people always calling for the destruction of the dollar, probably just as many calling for the destruction of the euro over the years, right?
yeah, but I think that that is very unlikely for the moment. The reason why investors are thinking, some investors are thinking that uh, the euro dollar may further go down is because
The interest rate differential.
the exactly the ECB is going to cut the
Yeah,
rates. But
right.
well, if the ECB is going to cut the rates, that's a good signal for everybody that the Fed is going to do the same too, and so is the Bank of England. So I mean, I cannot imagine a world where in this kind of a situation where the Fed and the Bank of England and the ECB diverge from each other for too long time. And so I think that if the ECB uh, is giving signaling that they will cut the rates, then why not the Fed is going to do the same? And I want to start this starting from the first page of my presentation. If you look at this chart, you're going to see the DXY in the red and unemployment rates, which is on the bottom, the blue one, and the PCE core inflation rate. Uh, the, the Fed has announced recently that they're looking at the PCE core inflation rate more than before. And if you realize that the PC core inflation rate has been rising, while if you notice that the unemployment has been falling, so this is pretty bullish for the dollar index, right? And that's
Yeah,
the reason why the dollar index has been going up lately, right? And
yeah,
I think that this is the this is a good reason why the dollar is increasing. But is this going to continue? That's the question, right?
right.
I mean, for example, look at the unemployment. How far can it go lower when the market is expecting, the market is still expecting uh, slower economy. Why I am saying slower economy is because the yield curve, the dollar yield curve is still looking down. So
Yeah.
if the yield curve is still looking down, I cannot imagine the unemployment going down any further. So the next move of the unemployment is going to be uh, to the up direction, right? So that's why the unemployment, the next unemployment figures may not be as bullish as before.
This
So,
Friday. That's this
so I
Friday.
think that, all right,
So
exactly.
you think there's
So,
a
so wait
surprise
for the
coming
Friday.
Friday? Okay. Wait for
Well, not a big
Friday.
surprise, but at least, yeah, but not a big surprise though. I mean, at least I would imagine that the unemployment is going to go, it's not going to go down, right? So it may maintain the level or it may increase just a little bit. So this will give the dollar bears a good reason to go into the market. And and can I then go
Okay.
to the next slide?
Sure. Go ahead.
Okay. And well, look at the financial conditions index, which is, I think, this is being announced weekly basis. And if you see the financial conditions index, which is in the blue, which is uh,
Yeah.
uh, blue line. Let me make sure.
No,
No, it's
the
the red one.
orange.
The red one.
Yeah. Yeah.
Yeah, the orange one. Yeah, that's the
Okay.
financial conditions index. The
Yeah.
financial conditions index are getting looser and looser. I mean, it peaked around the March, and starting from March, it has been going down, and I think that's the maximum level which the this index is going will be seeing. The reason is um, well, I believe that the financial
We're headed
conditions
towards
are going to go.
recession later in the year. Recession watch on
Uh,
for you.
Well, I cannot say it's a recession, but slower economy, I would say.
Okay, got
Slower
you.
growth. Not
Okay.
not a recession, but a slower growth is
Okay.
coming. So
All right.
if as you can see, the financial conditions are getting looser and looser. So if the financial conditions index get loose, then the dollar index will fall because uh, financial conditions index being looser, meaning that there will be more money available in the market, in the economy. So that's a good signal for the interest rates, right? The market interest rates, the treasury yields to fall.
Well,
Uh,
gold certainly made hay out of the March peak in financial conditions.
yeah, yeah, exactly. So when the financial conditions index is going to fall, which I think it will, and then
Okay.
you might expect
The
not
dollar to
if
fall.
not the gold, if not the gold, yeah, the dollar will fall definitely, but the gold will increase too. Yeah, but I think that the silver is going to increase more than that. The
Okay.
silver is going to perform much better than the gold when the dollar index starts to fall. So if you want to trade the gold and silver based on the where the dollar is going, so it's a good idea to look at the financial conditions index, right?
Yeah.
And that's very high frequency data. It's weekly data, so you can look at it. All
Okay.
right. If I go into the next slide, I look at the VXY from the gold silver fundamentals point of view. Um, yes, the blue line here is representing the DXY, the gold. I'm sorry, the dollar index. And the white line is indicating the convenience yield differential of the gold and silver. That is, you take the gold silver convenience yield and you take the silver convenience yield and deduct it from the gold's convenience yield, you get this line. And I mentioned many times before that the gold silver is
Ratio?
has a very the gold silver ratio has a very strong correlation with the DXY. Right? So if the
Yes.
gold silver index rises, the XY rises. The gold silver uh, ratio falls, the DXY falls. So well, it
Okay.
doesn't happen all the time, but the probability is high. So I
Got you.
see from this line and this white line, which is showing you the convenience yield difference of the gold and silver, is that it might start to fall. So the convenience of holding the gold will be less than the convenience of silver, holding of silver.
Got
Uh,
you.
so
So
the golds, the
so the gold silver ratio, I don't know, it's trading in the 90s. Should take
right,
a should take a hit down
exactly.
towards what, 40?
Uh, I I cannot say that exactly,
All
but
right.
at least
All
about
right. 70?
3 to 5%.
Okay.
Maybe, yeah,
Okay.
maybe.
All right.
Right.
That's a nice look.
So so that's from the convenience viewpoint of
Yeah.
looking at the
Okay.
gold and silver ratio. So I think that from this, if you follow my cursor, I think that this line, the white line, is
It's
going to
going to
start to
converge.
fall. Yeah,
Yeah.
it's going to fall a little bit, and the dollar index is going to follow that.
I see. Okay.
To the downside.
All right.
And
I
my
love the
last
way you look beneath the surface of the markets.
that,
Okay.
thank you. What I'm doing is looking at the fundamentals. That's all.
Yeah. Yeah.
And finally, the gold silver fundamentals. I continue to show that. It should have been something different. It should be
Were you surprised? Were you surprised at the were you surprised at the move gold and silver put on while the dollar was still firm and going up?
well, of course, that's a possibility, but
Well, I mean
in a time,
that happened. That happened. Yields
yeah,
were
of
going
course.
up, the dollar was going up, and gold and silver were going up. They all got to pretty high levels of bullish sentiment in the 80s, 90s, all three of them at the same time, which to me I
Okay.
haven't seen in a long time. The dollar, gold, and silver, people being bullish, those three together.
Of course, there can be times like this, but I think that's a bit unlike, and let me show you why. If you look at the net speculative positions of the gold, all right,
Yeah.
this is the white line showing us the net speculative positions, and the red one is the gold price. If you look back into the beginning of 2023, last year, it has peaked around this level, right? Which is
Mhm.
about 215,000 contracts long. And since then, the number of contracts didn't go too much. So this is kind of the top of where it can go. So if I assume that this white line, which is representing the net speculations of the gold, if it is going to start to decrease a little bit because of the dollar is getting stronger, then you might expect, okay, you might expect the gold to go down just a little bit, about maybe 100 and $150, maybe
Okay.
towards to 200 to $2,200. So
Okay.
and
Yeah.
it's very likely
Okay.
after all this rally, it's really
Yeah.
likely.
2250
I
to
mean, yes, the
2200.
dollar is strong.
Yeah. Got it.
Yeah, right.
So if we had
So
one more
again,
dollar rally, that would happen.
well, yeah. If we have one more dollar rally,
Yeah.
which is possible. I mean, I can't say that the dollar is going to start to fall from here from today, but maybe in about 2 weeks or 3 weeks, it might start to fall.
Okay.
and maximum. That's maximum.
Okay.
And if
Got you.
that becomes true, if that becomes true, then the net speculative positions will also fall. If not too much, but at least just a little bit, at least to the point where the investors don't buy gold anymore. So they look for a reversal towards $2,200 level in the next 2-3 weeks. That's possible. So in this case, I wouldn't say that the gold, silver, and the dollar might continue to increase into the future, at least for the short term.
Okay. Got you. Nice
And
stuff.
and if I show you the last
Slide.
presentation, the last slide, yeah. You're looking at the U.S. real rates, which is the white line. That's the
Mhm.
expected U.S. real rates. That's the expected one. And the blue one is the dollar index.
Okay.
You can see that the real rates has been increasing from the beginning of March
Yeah.
until today.
Yeah.
The reason why this has been so is because the inflation expectations have been going down. Why? Because the U.S. real rates are calculated by I'm going to write here. You take a treasury yields
Yes. Versus.
minus break even rate.
Okay.
Now, if you do this, for example, if this is 2-year treasury yields, then you take the 2-year break evens. The 2-year break evens, you get this line. And
Okay.
well, this line has been going up. Why? Not because the treasury just were rising, because the break-even
The
rates were
data.
falling. Yeah,
Yeah.
this one was why? Because people started to expect less inflation in the future. So that's why this has increased this
Yeah.
differential.
They were
And they
wrong-footed.
from
They were wrong-footed looking for 6 cuts. And now they might
exactly.
be wrong. Now they might be wrong-footed the other way and accepting that there may be no cuts.
Uh,
So we've
yeah.
gone from one side of the boat to the other.
But Dale, what is interesting is when the break-even rates fall, all right,
Yeah.
the dollar falls. When
Yeah. Yeah. So this is a big week
yeah.
for
So I'm sorry, that's the opposite.
okay. What do you expect from the
Yeah. So
refunding?
it means
Do you think
if
that'll have
break-even
some
rates fall,
impact?
then
That comes out, I think, in a few days, the Treasury refunding package, because that did provide a turn last October. Remember when they put more of the debt in the short end of the curve rather than the long end, and we had a big bond rally? Do you think something similar is setting up here?
might happen because uh, nowadays when I mean if that's not the case, otherwise, I mean, if the yield curve maintain too much of steepness, then it's not good for the economic expectations. So that's why they might want to put some pressure on the shorter end of the chart.
Okay. All
So
right.
and that's negative for the dollar. Yes, that's negative.
Yeah.
That's going to be negative for the dollar.
Do you think the yield curve inversion is starting to shift and that we could be moving towards steepening, even if rates come
Uh,
down? They fall faster on the short end
uh,
than the long end?
might be because I think that somewhere down the road, at least until the end of this year, because we're almost at the middle of the year.
Yeah.
I think starting from there, we might see some weakness in the economy. So that's why I think that's when that happens. the short end of the yield curve is going to fall, which will make the curve a little bit more flattened.
Okay, when rates fall, here's the key question. Is it going to be because of risk off in equities,
Uh,
or is risk going to like it that rates are starting to fall?
I think that's going to be because of risk off.
Okay, all right.
I think,
So instead of people going, yeah, your yields are finally coming down, that's bullish for stocks. The catalyst might be stocks under pressure that turns yields down as people. So the bonds behave like they used to in the old days. They're not a risk asset. They're a flight to quality asset for a while.
uh, from if you're asking from the stock market point of view, there, I would say that the stock market might be under pressure for some time. You know, the reason why is because if the yield curves start to flatten, it represents a uncertainty. So, I
Represents what?
mean, we know that when the yield curve uncertainty,
Okay. Yes.
that
Okay.
from the stocks point of view, because
Okay.
the more flattened it gets, the more flattened it's people are uncertain, become uncertain about whether they should invest for the short term or for the long term. They are undecided. That's showing you that picture. Well, that's a risk off from the treasurer's point of view, but that's going to be a risk on from the stocks point of view because of this uncertainty.
Oh,
Uh,
you mean stocks could continue higher, but bonds will fall and
no, just
yields go up.
the opposite.
The opposite.
The opposite.
Okay.
The
Okay,
opposite.
that's what I thought,
Yeah.
but that's not what you said. So anyway, anything you want to wrap it with, Okan? And I want to thank you in advance for a nice
Yeah.
presentation and giving us some things to chew on.
I put my last words here. I just want to wrap it up. So
Okay.
I think that these are going to happen, by the way. I mean, for example, if the core inflation index if it fall while unemployment does not fall any further, it's going to be not, sorry. If it does not fall any further, right, then I think that the dollar is going to go down. If the financial conditions index start to fall, I think the dollar is going to fall. If the convenience yield difference between the gold and silver, which is gold minus silver, I mean under 0.050, 0.005, it should be 0.005, which is the one that's here.
Okay.
Here.
It favors silver
That's
over gold.
it's right. Exactly. And finally, if the inflation expectations increase while the 2-year treasury rates stay relatively lower, then we might expect the dollar to fall in the coming weeks and months.
Okay. I have a target if we're peaking up here below 107.40 or so. First 105 in Dixie has to be taken out. And then 103.80 was a big number for me. And if we take out 103.80, that gets you into the par level and we'll be on the verge of breaking under par. How about 95 for a target in the Dixie?
I think you mean for the euro dollar, right?
No, I'm talking about the Dixie. I'm talking about the
Uh,
Dixie. First breaking under 105 is the first sign. Although I'm hoping we get one more shot up towards 107. But under 105 is ugly. Under 103.80 is uglier, which takes us back to the par levels. And then I think you're looking at a breakdown where we go to at least 95. Do you see that?
oh, you're talking
Hello?
about the dollar. You're talking
Yeah,
about
the
the dollar
Dixie.
index, right? Okay, okay,
Yeah, yeah.
okay. Well, I think that I think that the maximum level that we can see with the in the next, let's say about 8 months, we might go as high as maybe 107, 107 maximum. I mean, I would imagine going up to 109, 110.
Okay, well,
That
right.
would be
I'm
difficult.
asking about the bear market move. Once we start declining, is 95 a viable target?
95 is exactly a viable target because I think that from if I switch to the euro dollar, I think that it might be
120?
associated with one. Yeah, it might be associated with 120 or something.
Okay.
So
All right.
95 is yeah is the
Okay.
target. Yeah, I
Okay.
mean, which I think it will. I mean, I am very positive on that. I am very bearish for the dollar the long term.
Yeah.
So
Got you.
120 euro dollar and 95 Dixie is the target for me.
So will they start calling it the US lira?
Uh, US take please.
Lira. Lira.
Lira is yeah. Yeah, Turkish lira is okay.
No, will they start calling the dollar
It's not.
the US? Will they start calling the dollar the US lira?
Oh, you
All right,
you
you don't get it. You don't get it. All right, that would mean like,
I didn't
the
get. I
lira's
didn't
been
get.
the weak in a currency crisis for years. So I'm just saying, will they call the dollar
Yeah,
the
I know.
lira? Okay. Now, if I have to explain my jokes,
Yeah.
they're no good. Anyway, let me ask you, do you want people to follow you or get in touch with you someplace? Is X the best way for them to follow you? And if they have questions or they're interested in what you do to pursue it
Sure.
further, how would they do it?
Yeah, I will be more than happy to help people if they contact me at my Twitter, uh, at
And that,
sign Okan Aybar.
yes, his name.
Uh,
Okay.
yeah, it's all my name, first name and last name
Anyone,
all together, Okan Aybar.
anywhere else?
Yeah. Yeah, sure. They can contact me at LinkedIn on the LinkedIn.
LinkedIn? Okay.
Yeah, I'm
Should
on
follow
LinkedIn.
you. Should follow me. We should follow each other there.
Yeah,
Um,
sure.
okay. So Okan, I always like your, um, you know, your narratives. They, confirm or make me think twice about what I'm considering in the markets. I want to thank you. You've been coming in for years now, right? Been a few
About a year. Yeah,
years.
more than a little more than yeah,
All right. Well, I want to thank
yeah,
you for
exactly.
sharing your hard work with our community and edifying them.
Thank you. I appreciate it.
Okay. Okan Aybar, everyone. You could find him on X at Okan Aybar. It's spelled OKANAYBAR. Um, a good guy
Yeah.
to know what a great analyst. Okay, to know what he's thinking fundamentally. It helps even if you're a technician to have a good bias to trade with. So thanks again, buddy. Appreciate talking to you,
Thank,
and we'll get back together in the summer. See
yeah,
how
sure.
things play out.
I'll be more than happy.
Okay. Okan Aybar, everyone. And that's a wrap for me. You could join the team in 14 minutes on the Morning Edge. People are thanking you, Okan. And
Thank, thank you,
I'll
everybody. Thank you.
and I'll see everyone tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.